And last week we talked about the gyration finder, and we also put a calendar spread on using it. And now I want to talk to you about another way to trade sideways. Yes, I know a lot of you know butterflies, especially if you're in the hedge fund fold. But I want to do some basics here. So this is about finding stocks that are moving sideways and profiting with a butterfly. So we're going to be looking for gyration stocks. And let's talk about a butterfly. Now, one of the big difference between a butterfly and a calendar spread, I showed you the IWM calendar spread earlier, is that butterflies eat IV for lunch. They like expensive options. And so with that distinction, I'm going to show you how to find expensive options on stocks that are going sideways. So let's talk about the basic butterfly construction. It's really about putting on a bullish spread, in this case, a bull call spread, a bear call spread. All right, so these are two different trades. Both of them are sharing the same strike. Now, you can use a bull put spread here as well. All right, so you could literally create an iron butterfly by selling a bear call spread up top and a bull put spread underneath. But don't worry about that just now. Some of you would probably find that interesting, others not. So know that you can simply swap out the bull call spread calls with puts, the bottom two legs with puts, only one of these. So you'd have one short call and one short put, same strike, and then you protect with a put underneath as well. And that's an iron butterfly, two credit spreads, same risk graph for all intents and purposes. All right, so this one is going to offer us a potential profit of 100%. Here's an example on gold. And here gold breached the 160 level. We were expecting it to stay range bound in this range up here. And when you put the trade on, you get a profit zone, a backyard, if you will, where as long as the stock stays in this backyard, you're going to profit. This is the profit in the witch's hat here, and the wings is where the risk is. The upper break even 167.50, 157.50. Now the software will give you that information so you don't have to calculate it. And then really the game is to stay in the trade as long as the stock stays in the backyard. So how do you exit these things? Well, the first most important exit is when the stock breaches the backyard, when the dog jumps the fence, when the stock is outside of the green area, above the upper break even or below the lower break even, you exit. That's the basic way to handle these things on the loss side. The most important part, risk management. And you can see here that if you do in fact exit at that point, your risk is contained. Of course, the stock could gap down here or gap up here, but given a reasonable move outside of the break evens, your losses are contained a lot. All right, so that's one of the benefits. So please use the break evens as your exit point. How do they make money? They make money primarily, here's an example on gold, the GLD ETF. Gold broke resistance here on a volume spike the day before, follow through. Looks like we have a new range. We constructed the following broken, I trade broken wing butterflies, so I said broken wings, but this is a regular balanced butterfly. We bought a 152.50 call, sold the 162.50 above. That's a bull call spread. Then we sold the bear call spread, sold more 162.50 calls and protected with an upper call. All right, and that'll give us, that was our entry debit of 500, max profit of 500 as well. Created that beautiful risk graph right there. Nice little profit zone. The way we handle this, as long as the stock is below this line, above that line, we wait and we let time work in our favor. Keep an eye on these colored lines here and you'll see how these things work. By the end of the day on this trade, we were up just a tiny bit. All right, so we have 11 days for the red line, 8 days for the blue, 4 days for the green, and then 0 days for the expiration line. So watch the colored lines as I go day by day, and you can see how these things work over time. No exit here because the stock is still in the backyard. And then it rights itself, bounces off the lower break even, but doesn't close, closes above it, not below it. You're still in, the stock bounces up. And then with 1 day to go, a nice little $258 profit. On $500, that's over 50% profit in just 2 weeks. Now, that's how they win, but how do they lose? Here's another example. Oil had breached the support level of 4, and on a volume spike, further downside was expected. We put on this butterfly, expecting further downside on USO. There's our profit zone. And this is what can happen. It gapped down the next day, and we got out of this trade for just a small loss. Okay, so that's the benefit of the exit rules at the break evens. All right, now how do you find good ones? There's a lot of ways. What I just showed you was looking for stocks that are setting new ranges, but you can also find stocks that are in ranges using the gyration finder that we did last week. And we're going to tune it a little bit this week to give butterflies something to eat, IV, and we're going to look for sideways expensive options. So I'll show you how to do that in a minute. And then we're going to take that list and feed it into Butterfly Finder. And there's a scanner for that as well. Here's Gyration Finder from last week. The difference from last week is we're now going to feed in expensive IV stocks. We're going to look for stocks in an inside parallel channel. This is how you use the scanner. I'll do all of this in just a second. And then you hit search. All right, that's going to give you a list of expensive channeling stocks. You save them into My Stock List, and then you hit replace. And then you take that list, which is sideways expensive, and then you feed it into Butterfly Finder. There's My Stock List that was saved in the prior step. Select At the Money Put Butterflies, hit search, and you're off to the races. So let's go do it. Let's go playing right here. I'm going to go right into the scanners. First off, we'll start with stock analysis, gyrations, inside parallel channel. Here, I'm going to say, all right, I only want expensive IV stocks. There's a list for that right in Tom's tools. Let me find it here. There it is right there. Expensive IV stocks. Stocks with high IV. Hit search. I'm taking a look at some of these. There's a nice sideways pattern. Yeah, I like that one. Best Buy. Earnings is coming up on Best Buy, so we can't do anything with that today. 6 days away. Can't really play with that. Autodesk. Sideways. Beautiful. So these are sideways and expensive. And then take all of them. Take the top 33. That's all of these stocks. 33 came back. And then I'm going to hit replace. And now I have sideways and expensive. And then I take this new My Stock List. I go to searchers, single strategy, Butterfly, At the Money Put Butterfly, My Stock List. And I didn't mention this before, but with all of the scanners in Tom's tools, if you click help, it will walk you through every single part of the scanner, what every setting means. They have a really good help file system, and you might want to check that out as well. I'm going to hit search, and let's see what comes up on the list. Oh, well, just a lot of them. Just a lot of them. Now, just checking here. Okay, these aren't as good as I was hoping because, well, actually they are. They are. Now, here's the deal. Okay, you got the stock, you got the strikes, you got the individual leg prices, open interest, days to expiration, and earnings. So you do not want to put one of these trades on with earnings in the near future. Now, this one is offering 700% potential return on investment. Now, what I like to do on these is I scroll down towards the bottom because here's the deal. Let me just show you an example. So let's take this one. Yeah, you might make you might make 7,000% on this one, but look at the backyard. Let me zoom in. Let's go from 475 up to 520. I'm going to come down here and zoom in. 475 up to 520. Now here's the deal. Yeah, you can make 700%, but your backyard is narrow. Now that's not a bad, if you can get this for $7, if you could get it for $7, yeah, maybe the slippage is a little wide, then you have a really low risk trade. Now you're willing to risk $7 and maybe make a lot more than $7. That's only going to happen if the stock stays range bound. Although up here, the green line is quite steep and in profit. So if you could get that one for $7, you could consider holding it over earnings because you're only risking $7. That might be interesting to try. I'm going to keep that one on the side. That's more like gambling, but you're not losing, you can't lose a lot. You can take this through earnings and see what happens. While we're waiting for earnings though, IV will probably start rising, and that's going to push these color lines to the left. So it's not an ideal butterfly. The point being, the higher the max profit over max loss, which is return on investment, the more narrow the backyard. For that reason, what I like to do is scroll towards the bottom and find where I start seeing ones. And then I'm looking at it.